You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Whenever we have a market like this one, you can expect that publications and media groups or media channels like MarketWatch, Yahoo Finance, or CNBC, Fox Business, those kinds of things, are going to run stories about those people who were prescient enough, brilliant enough to call this event on the nose. Right? They're always saying, well, so-and-so predicted this would happen. Well, right now, that so-and-so, according to MarketWatch and Yahoo Finance, is a guy by the name of Dan Niles. Now, listen to this headline from MarketWatch. He nailed the March coronavirus sell-off. Now he says there's another 30% to go before the stock market hits bottom. Well, darn it. Dan must be really, really smart because he nailed this. And he now says it's going to get even worse. Well, it might. But how is Dan's track record? I think we should look back as best we can. Now, it's not easy because Dan runs a hedge fund for a group called Alpha One. The fund is the Sartori Fund, the Alpha One Sartori Fund. And thankfully, there was a track record of sorts published in 2019 by Yahoo Finance. So I went back and looked at the track record. Now, this is a long, short fund. I don't know what the fee structure is, but since it's a hedge fund, I think I can reasonably guess that he charges 2% per year and 20% of profits. So here is, according to Yahoo Finance, his track record in 2013, 14, 15, 16, 17, and part of 18. Are you ready? In 2013, a positive 6.3%. Good job, Dan. Good job, Dan. You were up. Oh, whoa, wait. The Vanguard Index 500 fund, Dan, the S&P 500, up 32 and a third. Oh, Dan, not so good then. Wow. They really beat you badly with just buying and holding the U.S. market. Oh, how about 2014? I'm sure you did better then. 2.42%. S&P 500, 13.6. 2015. This is when Dan's going to shine because that wasn't a great year for stocks. My goodness, Dan, you posted a 12.6% annual return for that year. Congratulations. You are the man, Dan, because you did beat the S&P 500, which only gained 1.3%. Then in 2016, a pretty good year. You barely made any money. You were almost at a break even, while the S&P 500 made 12%. In 2017, you lost almost 4%. The S&P 500 made 22%. Dan, why are people giving you their fortunes? Then in 2018, at least through February, you did beat the S&P 500. That was a bad year. The S&P was down 0.55 and you were up 5. But look at that. 2013, you made 6, then 2, then 12, then flat, then lost 4, then gained 5. The S&P 500 in 2013 gained over 32, almost 14. Up 1, up 12, up 22. Who would you rather invest with? And they're saying he called the market. Well, that's because Dan has this problem. I found a story from CNBC from May of 2018. Now, this was before the market went down at the end of the year in December of 2018, but he was talking about 2019. He made a prediction for 2019. He said that in 2019, quote, stocks could shed half their value. Half their value. 2019. Thinking back, and gee, I don't think you got that one right, Dan. No, the S&P 500 was up over 31% that year, Dan. I bet your fund didn't do very well. I don't have the numbers, but I'm willing to bet. So now they tout Dan as some sort of genius who called it right. Well, if you look at the results from Dan's fund, Dan has been bearish pretty much throughout a large percentage at least of the bull market that we had, and consistently got it wrong. And there's something so important you need to remember here. Downturns like these happen, but they're the exception, not the rule. Yes, if you're a market player or timer, you of course want to be out during times like these and in during the good times. If only we could be so lucky, because the experts apparently get it wrong when they try to time the market. What makes you think you're going to get it right? Stocks have gone up more than they have gone down, and you need to understand that is the only fact that means anything, unless predicting the future accurately and consistency is something someone somewhere can actually do. And I have never seen any evidence that anyone has in the past. Now we're going to take some of your questions. Remember, you can always call questions in 24 hours a day, 7 days a week to 855-935-TALK, 855-935-8255. You can also type them up at talkingrealmoney.com. Just hit the contact form. So let's get to some questions, all of which will be the written-in questions to talkingrealmoney.com, because we have a slew of those and very few call-in questions. So the call-in questions are in short supply, so call in, 855-935-TALK. Now, let's see. Our first question comes out of the Seattle area. Subject, Vanguard bonds. 1. You commonly reference Vanguard VBMFX in your podcast and Saturday radio shows. This Vanguard fund is no longer available to new investors. Will you please suggest another bond fund to replace VBMFX that can be used in Roth and traditional IRAs? Symbols drive me a little crazy, but I understand why we use them. VBMFX was the original Vanguard Total Bond Index Fund. It was the investor shares. They used to have two types of shares: investor shares with a $3,000 minimum and Admiral shares with a $10,000 minimum. Admiral shares had lower fees. Well, they made the fee on all the Admirals, the minimum on all the Admirals, $3,000. So these were obsoleted. So the new investors go into the Admiral shares. And what we've been trying to mention lately, and if we slip up, or if we have slipped up, I apologize, the new ticker symbol for the Vanguard Admiral Total Bond Index is VBTLX. VBTLX. You can look it up online. And it's the same fund. It's just less expensive. Now, there's more to the question. Number 2. Previously, you have recommended Vanguard's VWITX for individual accounts, not Roth or traditional IRAs. Can you explain why this fund is not good for Roth or traditional IRAs? Well, VWITX is the Vanguard, it's a tax-exempt fund. Which one is it? Hold on, I got to find it. The Vanguard, I thought I had it up here on my screen. Where'd it go? VWITX. Vanguard Intermediate Term Tax Exempt. I was trying to remember what the term was. Oh, the I. Sure. Intermediate Term. It is a municipal bond fund. Tax exempt bonds. Tax exempt bonds tend to have lower yields, all other things about the bonds being equal, quality, duration, that kind of thing. So it makes more sense in a non-taxable account like a Roth or an IRA or a tax-deferred account to have something that has the higher yield on a comparative basis. So we suggest that you use the VBTLX, the Vanguard Total Bond Index, inside retirement accounts. And if you're in a higher tax bracket and you're looking for a tax-free vehicle outside of the IRA, then use the VWITX, the Vanguard Intermediate Term Tax Exempt Bond Fund. I hope that answers your question. And I hope you send in your questions to 855-935-TALK. This one is a question for the podcast. And it starts out, background. I will be leaving military service later this year. Thank you for doing it. I have investments in the TSP and can leave them in place after leaving service or move them. I was planning on doing a direct transfer to an IRA and reinvest the funds in a diversified portfolio. With the downturn in the market, would this be considered a lateral sideways move, or would I lock in my losses with the decrease in value of shares owned? So should I make the transfer when I can or wait? Thanks. Actually, Dale, there's no reason to make the transfer. The TSP has very good funds at very, very low prices. I mean, you can get the broader U.S. market. You can get, small caps. You can get good income vehicles. The fees and expenses are very low. You can build a decent portfolio with it. I don't see any reason to move. And by the way, if you're moving money out of a TSP into an IRA, there are no gains or losses. It is truly as lateral a move as it can be, even from a tax standpoint. You're merely switching it from one type of account into another and some other mutual funds, which will inevitably be, I guess, slightly more expensive. And the only time I might consider moving them is if you were moving them to somebody who was going to manage money for you at a very low fee, I hope, or you're going to Vanguard or somebody, but even then, I don't see the necessity. You've got a really good account. The TSP is excellent. And if you're young, I don't know how old you are, but, you want to heavily emphasize the C and the S kind of a thing, but, have a little in the bond fund, the G. Thanks for the note. I appreciate it very, very much. And let's do one more. We may do two, but right now I'm feeling one. How much time do we have here? Yeah, I want to keep it around 15 minutes. I'm going to do one more. Let me go back to it. Hold on. This is almost live. I'm recording it live, so it'll be recorded. All right, this is a subject. Thank you. Rebalance this week. A week ago, I wrote in a question about rebalancing my Merriman Ultimate Buy and Hold portfolio and whether it was timing the market. Well, I rebalanced some bonds and tips, which were oversubscribed according to my plan, into equity index funds. So far, that has paid off handsomely. Thank you for your frequent encouragement over the past few weeks. Well, thank you, and I am going to do another one because this was just a comment. But bear in mind, as we've been seeing, you have your up days and your down days. Rebalancing is not something you do because it's going to miraculously make you more money. It's a form of discipline that just needs to be maintained. We'll sneak this last one in. Portfolio strategy. That's the subject. My wife and I currently have a rollover IRA and a Roth IRA. I have each account invested differently in low-cost index funds. Would it be wise to have each account invested in the same fund, such as VTWAX, Vanguard Total World Stock Index? It's not unwise, because it's not like having all your eggs in one basket. It's like having lots and lots of baskets inside your portfolio with different eggs in them. If you're a 100% equity investor, you're someone who is comfortable with that high degree of volatility associated with the equity markets, and that means in some years, losing half your money. Or this year, 20 or 30. Could be more. I don't know. But yeah, there's no reason to have multiple index funds, equity index funds anyway, when you have VTWAX, because it pretty much covers the global market with a very few exceptions like microcap stocks and the like. So I think that's just fine to have everywhere for your equity position. Once again, two ways to get in touch. Calling 800-386-3004. Second, writing. Go to Talking Real Money, hit the contact form. If you have a question we can answer on the podcast, that's the way to do it. If you have a bigger question, If you're one of these folks who has a portfolio right now that you just aren't sure about, you think you may have been playing the market for a while and maybe you want to stop doing that and get really invested, well, you can talk with one of our advisors online very safely from the comfort of your own home, video or on the phone or typing it up. I just made it do something. And it's really easy to set up an appointment. Just go to talkingrealmoney.com and set up a meeting. Couple of things I promise you. One, there is no sales pitch. We don't need to. Two, there's no obligation or cost. So how can you go wrong? Now, will we manage your money for the rest of your life? No, not for free. This is capitalism. No, but our fees are very reasonable, among the lowest in the industry. So go to talkingrealmoney.com, set up a meeting with an advisor. They are all working right now. Everybody's working. They're just working from home, like most of the country. But we're fully operational. We're open. We're ready for you. Just go set up an appointment at talkingrealmoney.com. And by the way, tell friends about the podcast. Participate if you can. Subscribe. That'd be great. And by the way, real quick, if you're listening to this on Friday, we'll be live on Saturday, too, where you can call in with questions to 855-935-TALK. Tom and I do our show live on Saturdays at 3 p.m. Eastern, noon Pacific for 2 hours. So you can call us live if you want to actually talk, like a conversation. 855-935-TALK, 855-935-8255, or visit us at talkingrealmoney.com. Thanks for being there. I'm Don McDonald.
Talking Real Money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only.
Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times.
Also, as much as you want it, no one can accurately, consistently predict the future.
So past performance doesn't tell you a darn thing about what the future will bring.
Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities.
Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor.
Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures.
That should keep the lawyers happy.